Hi, Austin.
Hi, Simon. How's it going?
Pretty well. Thank you very much. And good afternoon to everybody who's already logged in into our webcast for September 2020.
Fantastic. There's definitely some new guests here, some unknown names, so that's fantastic.
So for everybody who did not watch the webcast before, this is not Nina today on my side, but Austin. And yeah, I think also we will have a quick introduction right in a few seconds. Maybe we wait until 1 minute after 5.
Perfect.
And I see the number of listeners is still increasing, so let's wait a few seconds. Austin, do you want to kick it off?
Yeah, fantastic. I'll get started. So just a brief introduction from my side. This is actually the first time I've joined one of these webinars. So I'm the International Account Executive at Building Radar. I've been working at Building Radar since June 2019. And essentially my job has been to build the foundation to scale our international territory or our presence, I guess, around the world outside of the DACH region.
Perfect, thanks. My name is Simon. I'm at Building Radar since May 2017. And yeah, I attended all of the webinars so far. I'm excited what we will see or what we will discuss this month. I still see the list of attendees is increasing, so let's go slowly over the agenda, but I think we will need the whole 30 minutes, so we should not wait too long. For everybody of you who listening for the first time, each month we have 3 main topics. So we have Building Radar indicators we're talking about. These are slides you saw before. If you attended one of the webinars before, we have a comparison between data for different countries. And each month we have a specific topic, a main topic, where this month we look at a comparison with the data from 2019. All of the slides developed over the time. The initial idea was the starting point of the Corona crisis in Europe when I think that the first shutdown in Italy happened. We asked ourselves, how can we display this political and economic crisis within our data? This webcast developed thanks to your questions and to your requests. So we could not have developed this webcast without questions. You are able to ask questions during the webcast. In the chat, you can also raise your hand if you want to ask a question directly over phone, or if you can just write down the message. Yeah, but for a short introduction to Building Radar and our leads, I would hand over to Austin.
Yeah, sure. So those of you that might be new to Building Radar, so we're essentially a lead generation platform for the construction industry. And really what sets us apart to all of our competitors, I guess, is the fact that we're using artificial intelligence to search for new construction projects. And the way that works essentially is by looking at 3 main sources of information. One of those you can actually see in front of you right now is articles. So we're looking at the news. So in the news, we're looking at, I guess, 1+ million articles every single day. And then from that extracting, I guess pre-pandemic it was about 5,000 construction projects a day. And now I looked at it, I think it's roughly about 1,000 projects a day, about 30,000 projects in the last 30 days. And the way the article section works, I guess, is through natural language processing, right? So we have to teach our AI to really understand and interpret this information. So when it looks at a news article, these 1+ million articles every day, it needs to go say, okay, is this a construction project or is it not? And then once it identifies that it's a construction project, then we use what are called neural nets or classifiers to then find further bits of information about that construction project from the news article. So if we go, okay, is it a office building or is this a tunnel? You know, what phase is the project in? You know, what's the construction cost? Is there a project volume mentioned in this news article? Are there some associated companies mentioned, such as the you know, the general contractor or the architect or the project owner, developer, and so on and so forth. As you can see actually down the classifiers in this lead form below, so construction start date, end date, even gross floor area. And depending on if this information is mentioned within the article, we can extract that and provide that to you in lead form. And just jumping off the article section, I guess the other two bits of information we're looking at, or sources, are tenders. Correct me if I'm wrong, but I think we have now more than 100 tender sources in Europe. And I think in the last 30 days extracted more than 110,000 tenders. So these are in pre-bid, open bid, awarded bid. And the last source of information we're looking at are actually architectural domains. So you imagine when an architect posts, for example, that they've just won the design competition to build a new office building in the UK, then we can extract that information in real time as well. And then the nice thing is when we deal with such a quantitative level of data, by using AI, is the fact that we can actually aggregate that data and then provide market analysis, which is essentially what Simon Winters prepared for us today.
Exactly. So this is the single lead our customer would see in the platform if he would use our platform. And this single information we look at on an aggregated level. What we do here. So these are early stage informations coming from article, as Austin explained, since February 2020. So this would be starting point calendar week 7 of this year, where 1 week later this shutdown in Italy happened. And we look at the total number of new construction projects we generated as lead per week. So these are weekly numbers. And what we see here until this dotted line is a sharp decrease, what we detected as Corona effect. So this decrease in the data is connected to the Corona crisis. And since then, since beginning of May, we see an increase and a recovery to the pre-crisis level, what we see in this horizontal dotted line. And now after this, maybe it's a short summer break or connected to a summer break or something like that, we are still more or less on the pre-crisis level. So we are back at normal at the moment, considering the data for Europe.
I'm curious, Simon, actually. I was just going to ask a quick question. You can see here as well, obviously this dip during the summer break, which is, I guess, a little bit normal, but then following that, we see another dip here, just coming into the start of September. Now, I'm sure you see in the news as well, in France, for example, and I think it was the 4th of September, had 9,000 coronavirus cases in a single day. Again, in the Balkans and other areas across Europe, Netherlands and Spain, we're seeing this second rise of the pandemic. Do you think that could be attributed to this kind of second dip there as well, or what are your thoughts?
Could be. We will come to that. We have a specific slide for that also later, but very good question.
Perfect.
And I mean, this little dip here could be normal. What we will see later over time, of course, our data is not only sensible to the Corona epidemic. When we will look in the third topic on the year 2019, we will see that it's also sensitive to other shocks and other political economic effects. But this could be normal. So overall at the moment, and these are the numbers for DACH, which look quite similar to the data for Europe, is that we are still recovered. And it might be that this could went to a W development, but at the moment I would just say we are back on normal.
Perfect.
Also, more or less, a similar development we see for our building radar indicator for Germany. So this is the development since calendar week 7. We see this sharp decrease, and we also see a recovery to the pre-crisis level for the data for Germany. This hole is a little bit deeper, or this little how to call it, it's like a little drop, but I think this is nothing to worry at the moment. Of course, this could go down the next weeks, but at the moment looks fine. What's more interesting is if we compare our building radar indicator for Germany to the German main index, the stock market index, the DAX, we see a quite similar development. So the decrease due to Corona happened 2 weeks later. So we could say that the building radar index is more sensitive or was more sensitive to the coronavirus than the DAX was, but still we see more or less the same development. So it correlates with the main German stock market index, not within the last weeks. So DAX is still stable, but we see this drop in the data here, which we should not go much into detail at the moment, I suppose. We are still at the building radar indicator for Germany, and if we widen our scope a little bit to in going back to the year 2019, we see that it was a more or less stable development in the second half of 2019 in Germany. We see this little break in the data in the switch from 2019 to 2020. This is pretty normal, and it's also seasonally adjusted already. But what's I mean, most significant is this V development. This decrease is what we saw on the slides before already, is the decrease due to the coronavirus, and we see immediate recovery after that. So you surely heard it in the media news that everybody's talking about a V development or a W development. So this would surely be a V development. If you look at the red line, which is the moving average of our index, it could be that we see a W, so a second sharp decrease within the next weeks. But that's the good thing, the exciting thing, that we do not know at the moment. All we can say is that it's possible, but at the moment we are more or less on the pre-crisis level. Austin, do you have any questions on that? Any questions from our listeners?
Not just yet that I can see, but now would be a good time to ask if you do have any questions related to these previous slides, or you know, the one related to the stock market as well, where we saw this indifference.
What we see next is these are data. So in the first slide, you saw that we can differentiate between different categories, construction categories. So for example, we saw an example for an office building. We also have information about the hotel business, about projects in the residential sector, and of course in the office sector. And if we look at the development in these different sectors in detail, we see, of course, more or less, it's we see the decrease is more or less the same. It's a little bit later for the office buildings than for the others. But as you can see with the green line and the red line, we do not see a full V development in these two segments. So both office and hotel business did not go back until or to the pre-crisis level.
I'm curious with sorry, I was just going to say, I'm very curious with office as to really how the coronavirus is going to affect office spaces in the future, given the fact that, you know, how quickly we've all kind of moved into agile spaces, working from home, and whether or not this is going to be the new norm, and if it makes sense to even, you know, build new office buildings and things like this in the future, when, you know, we're looking to, I guess, shrink the office space and make people more agile.
Yeah, could be that we see already influences through that whole home office discussion in this data already. Of course, we're looking at the data, so please always remember what we track here is aggregated data on news media coverage, on definite plans on new construction buildings, as we saw with this office building example. And if we have something like a pandemic, like the coronavirus, it's definitely for the construction sector that we have a specific lag in the data. So of course, if there's I mean, most of our if you look into the market, you surely heard about that signatures about more or less done deals were blocked due in the pretty early beginning of the coronavirus and stuff like that. It's the same in the construction sector, right? I mean, ongoing projects were more or less what we heard on the market were ongoing, but the decision about new projects were significantly decreased. And this is exactly what we see in this development. And it's just an indicator. It's a hypothesis that this is might be connected to the home office discussion, that less office space is needed in the future, and that this not going back to the pre-crisis level in this green line, which stands for the office sector, might be connected to that. Might be a bit confusing, Austin. I hope it's still clear.
What I'm talking about. Clear so far from my side. If anyone has any questions, once again, please feel free to add them in the chat section, and we'll try best to answer those as well.
Yeah. On the next slide, we differentiate between structural engineering and civil engineering. Although the development is more or less equal, I mean, it's important to look at the details. So, for example, the civil engineering sector recovers 3 weeks earlier than the structural engineering sector, and also recovers faster. Last 2 weeks we saw this little drop, but at the moment we are still above pre-crisis level in the civil engineering sector and below the pre-crisis level for the structural engineering sector. But overall, I mean, both sectors recovered. Looking at the split between public and private construction, we also see an earlier recovery in the data for the public sector than in the private sector. This might be connected to that decisions in public projects which come from the government, for example, could be made earlier, right? Due to more security, maybe the private sector or private investors waited a little bit longer to reactivate their decision on new projects. But
I'm actually really,
again,
oh, sorry, I was just going to say, I'm actually really curious to see, I guess, over the next 6 months, the difference between the public and private sector, given that there's been so many different commitments from governments around the world to really push into the public sector. Like, for example, in the US, I think they've committed $2 trillion for construction in the public sector. And when this comes into realization, I can imagine that's going to really show off on these graphs.
I do not hope so, but I could imagine that these two lines will, over the next 6 months or next 12 months, will separate, right? But
guess we'll have to wait and see.
Yeah, exactly. We don't have to wait for our second main topic, comparison between different countries. What we see here is again the building radar index for Germany compared to development in Switzerland and Austria. So this is what's called the DACH region. And at the moment, we are at more or less the same level. What did not look like in the past, right? We had later a decrease of the data for the Austrian market, as you can see here. So the German market and the Swiss market, based on our data, decreased way earlier. The Austrian market also recovered faster from a lower point, recovered faster until this pretty high level here. And yeah, now it's converging.
I was just going to say, do you think that's pretty reflective of really how Austria kind of handled the pandemic as well? Because if you look at, not so long ago, they were the first ones to, not wear masks so much anymore, start opening up restaurants much earlier than Germany as well. And maybe this is the reason why we're seeing this change, because they're much quicker to handle it and I guess bring down the numbers to a low risk sort of period.
So for me, I would definitely say that following the decisions made and communicated by the national governments, especially from Austria, it's not surprising that the highs and lows are stronger for the Austrian data than for the German or for the Swiss data. So I remember that the Austrian government, Chancellor Kurz, pretty early decided strict restrictions. So I remember a difference in the handling of the crisis, but as I'm an analyst, I would not speculate too much, but it's definitely covering some of these government communication. What we will also see in the next slide, no, not in this slide. This is the only tender slide we have. So these are numbers for tenders in all three countries. Yeah, quickly referring to that, we in the last webcast we always said there is no corona effect in our data for tenders. In the last weeks we see a little drop or a little negative trend in the data for Switzerland, but I would at the moment would not connect that to any corona effect.
Yeah, I would still think that could be attributed to the summer break. People are away, they're not so often, putting bids out or tenders out on tender sources like TED or something like this.
Yeah, definitely. So we always look at or compare the data to calendar week 7, as we detected this as starting point of the corona crisis at least in Europe. Definitely, of course, not in Asia. In the United States, it was later. And this is also what we see in our data. So the early stage information for the United States dropped 2 weeks later than in Europe, and recover 2 weeks, also 2 weeks later. So we have a lag of 2 weeks in the drop, in the decrease, and in the recovery between the two continents. And again, if you ask for some external effects also from the political decision making, we see a switch in the data in around after May, between May and June, where Europe recovers faster than the United States. But still, I would not indicate so much on these switches, but would look on the overall trend line, which says that both trend lines are positive at the moment. The trend line for the red line for Europe is stronger, so the recovery is strong at the moment for the data for Europe. I would not say that it's too bad that we are below the pre-crisis level at the moment for both continents. So connected to this coronavirus, I would still say we are on a positive trend, back to a stable development in a coverage of new construction project. Something what will be interesting in the third part of our webcast. And talking about the third part, looking at the time, so 5 minutes left. I would switch to the next slide of this second chapter, where we, it's the same logic. We are comparing Europe, not with the United States, but with the development in the data for Great Britain. So how many construction projects are announced and in the media coverage in Great Britain compared to Europe. We also see this sharp decrease, and what's significant is that we see a lower recovery for Great Britain until even almost August.
It's interesting, actually. I was just going to say that speaking to a couple of customers of mine in Great Britain, or of ours, most of them have actually mentioned that they've been relatively unaffected by the coronavirus, and that especially with projects, continuing to go on rather than being delayed or cancelled, as we've seen in other countries or regions. And then if you speak to anyone in Ireland right now, they'll tell you that they're in a construction boom, and that they're flat out and definitely don't need a lead generation service. So that's always, I guess, exciting to hear that even during these times that Ireland really seems very unaffected, at least from what I've heard. I'd be curious if anyone is located in Ireland who's in the meeting today to perhaps ask a question or maybe comment on that.
Yeah, would definitely interesting to look at Ireland separately. I'm sure we will do that. But now for the last minutes and for the last part, comparison to 2020. And what we will see here is that, of course, in 2019, at least in Europe, their coronavirus was not in the media and was not present in our daily life. But still, we also see ups and downs, but not as significantly like this corona decrease, this corona effect we see here in 2020 data. What we want to show with this data is that our data, of course, is not sensitive only to the coronavirus, but also to other external shocks. If we look at the data for Great Britain, no, first we look at the data for United States, which is more or less stable in the whole second half of the year. Regarding our topic, the coronavirus, and why we call this decrease a corona effect, is you see here, if you look at the development for the United States in the last year, we do not see any significant decrease or increase during the time we see this sharp decrease. Yeah, so this is what we want to show with the data, and of course it's seasonally adjusted. So every year from one year to another we see sharp decreases. We do also not see a sharp decrease in the data for Great Britain during the coronavirus, so during the weeks of the corona decrease this year, but we see this constant decrease. This might be connected to Brexit, as we mentioned it earlier, or to other economic shocks. if there are no further questions, not from our listeners, not from you, Austin, thank you very much from my side. You can feel free to write us an email. Of course, we would be more than glad if you register for the next webcast on October 8th, again at 5 p.m. Central European Time. And yeah, I hope you had fun. You will receive the slides from us after the webinar webcast, and nothing more to say from me today.
Perfect. Thank you very much, Simon. Definitely appreciate you preparing this for us. And yeah, really cool to look through it.
Thanks a lot. Have a good day, everybody. Bye.